Sarah Eisen on Nike. Tim, what do you make of the quarter?
I like the quarter, but no one was looking at the quarter. No one was looking at the next quarter. We're probably looking at the second half of 26, and maybe this gets pushed out to 27. So what I like is what the ladies are talking about on inventory. Essentially, you've cleared out inventory, and I think they were, inventories were down somewhere going into this number around 11%. They're probably going to show down even more so. So finish with $7.5 billion. Also, some sense that the previous management team was really giving ground on wholesale, and that in fact you'd seen full price selling, something that was a problem, and that this is really where the company's going back. This is where I think the market, the investor community gets more excited about it. In terms of product and innovation and the things that I don't really have a great call on this. I do think you have a case here where the stock as an investment is something that you can own now. I think you've de-risked it. I think you've taken a lot out, and you haven't necessarily bought into Elliott Hill as a white knight, much in the way some other companies that have changed CEOs. You had that first reaction. At 27, you could see an EPS inflection of this company north of 40%. I think you can own it here.
Is the 800-pound gorilla in the room that Elliott Hill has been there for 40 years, and he's the turnaround story? Where's the innovation going to come from? And I'm not being really aggressive towards him, or maybe I am, but where's that innovation going to come from if he's been there for 40 years? Did he have it already?
So for you, it's really a wait and see.
36 of
them. Right, exactly. It's only recent.
Fair point.
And he's not the only guy tasked with innovation. I mean, he's the CEO, but he's not necessarily the guy that's probably on the front line of product innovation, if I had to guess at this point.
I would say that when you look at a CEO, it's the guy that you're playing a round of golf with, right? That gives the 50,000-foot-up story. This stock has been in a declining trend line since November of 2021. There's more than the problem is it's the private companies that are taking away from share. So what exactly are they focused on? Shoes, apparel, digital? If they're trying to get away from Air Force One or Jordans are 15% of revenue. Air Force One is 1% of revenue. They're trying to build up women's apparel. So if women's apparel is 3% of overall revenue, are you going to go and buy at Nike now?
I always did, so I did.
Would you increase?
I mean, if they had the right product lineup, I don't think share is just taken away. I mean, I can't believe you said that yourself. It was a setup for Guy to say that Tim would buy women's apparel, but for you to say that you would.
Whatever.
Oh, Tim, I don't know.
Wrong person, wrong time. They need a new blood, and I agree with Tim. He's not the only one tasked with it.
So no matter what, you're not buying into Elliott Hill.
No, I think you're going to get a pop, but I think tomorrow the stock is going to be down roughly 3 to 5%. This is not even a dead cat bounce. Guy could talk about the technicals on it. It's below all its moving averages. This is a lackluster bounce of 2% where you should have had a rebound.
Yeah, I mean, Steve points out the level. Sarah said 50%. It's probably more like 65% from the all-time high a few years ago. Obviously not good. And as much as people want to say, it's a China story, China's the third region right now behind, obviously, North America and Europe and the Middle East. The problem is the deterioration in China is not turning around anytime soon. I think on the ground there's probably a big push to get away from Nike. So you got to feel that that's going to continue to deteriorate. The question is, can North America pick up the slack? Valuation has always been reasonable the last couple of years, but I don't know if it's about that right now. I think Steve is probably right in terms of innovation. Competition is there, and you have a series of lower lows and lower highs for a while. And I think this bounce is basically what we gave up during the day. I think it's short-lived.
It's not cheap either.
It's not
cheap at all.
Right
It's expensive.
Yeah. Right. But as you and I were talking a little bit before the show, I always say, when you're a new CEO, you kitchen sink the quarter. And this quarter actually really wasn't bad, particularly North America. But what if this is the kitchen sink, right? What if this was a very conservative quarter where they could have done a lot more with the quarter? And so I don't know. I'm long, but that's not been the right place to be, but I'm staying long.
Yeah.